Hey, ladies and gentlemen, how you doing? This is Dr. Greg McLeod from the Traders University here, and it's so good to be with you here on this broadcast. We're going to get started momentarily. Welcome to Bulls versus Bears, the week before forecast. My name is Dr. Greg McLeod, and we're going to get started. I'm going to share my screen and let's get this party rolling. And let's go ahead and get started. So let me go ahead and we'll get to something here. We're going to go right into the economic calendar, and we're going to get a game plan for this upcoming week. And boy, was it a fireworks being lit on Friday. We had non-farm payroll that came out, and boy, it did not disappoint. In fact, it surprised to the upside as more jobs were created than expected. The expectation was for 180,000 jobs to be created, but in fact, we had far more jobs created than before. Yes, that's right. So we had a little over 235,000 jobs created, and that's spooked the market on one side. We had the stock market rallying, and we had the dollar actually rallying too. It's a couple of things that never usually happen. And we had gold sell off sharply down from the as high as the 2070 area down to near the 1999 area, and we've since rebounded from there. But let's get right to. Let me go ahead and share my screen. Share screen one, and we'll go ahead and get started there. Now, this is my market heat map. It's an arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not. It has a powerful heat map scanning tool. The tool helps us to locate opportunities in the market when they occur, and it's very convenient. Green is an uptrend, red is in a downtrend, and you get 50% off for a limited time only. But you can also just go to the front, and one of the 6 powerful heat maps is listed here, the Forex majors. Now, right now, I'm doing this broadcast on a Saturday, so there's no activity on the Saturday unless you're trading Bitcoin, of course. But let's go ahead and look at the economic calendar. You can access this for free. Just come to mymarketheatmap.com, bookmark it, come over and visit, and get access to this free information that can help you choose the right currency pair. Now, one of the biggest mistakes that traders make when trading is that they usually pick the wrong thing to trade, right? And or they get married to a certain currency pair or a certain instrument, a certain index, and so they're not really sure why they're choosing this particular market to trade. And the economic calendar tells us pretty much what's going to be in play, because that's news is one of the big drivers of currency pairs, of instruments, knowing what people are interested in based on the news. News is like a giant rock that hits the water and creates this ripple, or think of it as the wind blowing into the sails of little sailboats. And those currency pairs and instruments like the NASDAQ and the S&P and the euro are the sailboats in the water. And the news that comes out either at 8:30 a.m. Eastern time, or 10 o'clock Eastern time, or 2 a.m. in Europe, or 4 a.m. in Europe, those news events drive the market. And they provide volatility, and they tell us where the party is. So it's like fun with flags. Look at the flag, and we can see what's going to happen. So we're going to start the economic calendar. We're on for Sunday, May 7th, 2023. We have Westpac consumer confidence that's coming out, and it's the previous number is 85.8. Forecast calls for a drop to 82.1. And so the Australian dollar and the Australian currencies, Aussie Swiss, Aussie Yen, Aussie CAD, are going to be in play. So that probably be the best place to look for trades, because you could get and say, well, there's news and trading news is risky. Yeah, but if you trade something like the Canadian dollar during this time, and it's not moving, it's because there's no news. Okay. So you want to, you want some volatility, you want some movement, some reason to be in the trade, and news is a reason for people to be into the trade and where there's interest. And you're also at 11 p.m. on that Monday, you're going to have the balance of trade out of China. Expected to fall from 88.19 down to 74.3. Now, those numbers could impact the direction of the currency that we're talking about. But we really want to just know that it's active. And we're going to use our systems, our strategies, our entry methods, whatever we use to get into the market. That's what we're going to do. We're not going to really say, oh, because it's a good news item, it's going to cause it to go up, or it's a bad news item, it's going to go down. Because there's a lot of other little factors in there too. The previous number could be revised, like for instance, non-farm payroll had 2 revisions to the downside. So even though we had a strong upside number Friday, the headline number, but they have these revisions. So that, which means they made a mistake. They said, oh, we said it was this high, but it's really a lot lower than the really. So really all the joy and excitement and the volatility, directional movement that was behind the currency because of non-farm payroll for the past 2 months was unfounded because they made a mistake. And because they made a mistake, that's why, they actually downgraded 2 of the non-farm payrolls. They downgraded the March number, okay, because this is May, so the April number, this is the April number. The April number was fine, right, better than expected, right, the April number, but the March and the February number were reduced, okay? So that was actually negative. So people say, why did the dollar rally and these different things? Well, that's, there are a couple of things that were at play here. So because there's revisions, because there's whisper numbers and expectations and forecasts, we just really want to focus in on that the currency is going to move. It's going to move up or down. It's going to give us movement. We use our system to determine what direction and how to trade it, okay? So I wouldn't really say, oh, because this is high, higher number than the previous number, it's going to be good for the currency. Sometimes it's like we had actually non-farm payroll, we had the FOMC actually raise rates and the dollar actually fell. So we can't really just go on assuming just because a certain number comes out a certain way that actually means that the currency is going to behave itself in that way, because it could completely do the opposite. So what we want to do is focus in on that. During that time, this currency will be impacted because of the news release. And so we want to look at it as something that's going to move, but don't put a lot of confidence in the directional bias based on the number, okay? So just know that, like for instance, we're going to look at the Chinese inflation rates coming up and the Chinese trade balance. So you say, well, we don't trade the Chinese renminbi, but the largest trading partner to China is New Zealand and Australia. So if the China numbers are good, then that's going to be good for usually positive for the Australian dollar. It's going to have an impact on the Australian dollar, okay? Usually if it's a bad number for China, it's going to be bad for Australia. But again, just know that the Australian dollar is going to be in play, even though you see the Chinese flag here in the economic calendar. Just you want to tie in New Zealand and Australia together when you're looking at that flag, and those are the currencies that will be active during this time, okay? Now moving right along to Monday, May 8th at 8:30 a.m., part of the 8:30 a.m. news cycle that happens every day. We have the U.S. inflation rate, we have the American flag. So we're going to look at the impact of the U.S. dollar. And in particular, we're going to look at the euro as the anti-dollar to trade dollar news or U.S. news. Inflation rate month on month, MOM is not MOM, but it stands for month on month, which we're going to compare the April number to the March number, because these economic numbers are backward looking because May hasn't finished yet, right? This is a high impact item. Previous number was 0.1%. Forecast calls for a rise to 0.4%. Usually if we see an increase in inflation, it'll be good for the US dollar, as the Fed will have to raise rates, and interest rates are the largest factor impacting currency values. Higher interest rates usually mean a higher US dollar, okay? So we could see the euro actually go lower, but in the technical side, the technical picture that we'll look at after this, we'll see if that's actually in the cards, looking at the charts using technical analysis, okay? So the 8:30 news cycle is going to actually have 3 US data points. We have core inflation rate year on year. Previous number is 5.6%. Look for a drop to 5.5%. And then you also have the inflation rate year on year. The core, when they talk about core, they're talking about X transportation or food and energy. They try to take out because it's volatile. I use food and energy, so any of those numbers would be most, for the average person. The inflation rate, the core inflation rate is probably not, will impact your pocketbook, is the one that includes food and energy and transportation. But they're forecasting it to come out about the same at 5%. Remember, the Fed's target is to bring inflation down to a 2% target, but it's been as high as 7 or 8%, so it's actually coming down. So maybe it's plateauing at 5%. At 9:30 p.m. on Wednesday, May 10th, we have the Chinese inflation rate year on year expected to rise from 0.7% to 0.9%. Again, we don't trade the Chinese renminbi or the yuan, but we do trade the Australian dollar and the New Zealand dollar. So we would look at movement in that currency pair at 9:30 p.m. Eastern time. And maybe a few hours or even a day before, you'll probably see the Australian dollar even position itself before this announcement. Now, we're going to have a big Thursday, May 11th, is going to be the UK featured with the Bank of England interest rate decision right off the heels off of the coronation of King Charles. Big congratulations to him and Queen Camilla. And we're going to see the previous number is 4.25%. It's widely expected that the Bank of England, the monetary policy that will raise rates by 25 basis points to 4.5%. And that could have a positive impact on the pound. So we'll look at the pound currencies: pound yen, pound CAD, pound dollar. So we'll take a look at that. That's going to be at 7 a.m. Eastern time. And then right after that, we'll have PPI. That is the producer price index month on month. The US at 8:30 a.m. during our 8:30 a.m. news cycle. Look for the previous number at negative 0.5% to rise to 0.3%. So anytime you see the PPI, just think of they say index, but just think of inflation, producer price inflation. They're expecting it to rise, and anything that indicates a rise in inflation usually causes the US dollar to rise, or will cause the euro to fall, because the euro is the anti-dollar. So we can either go long, look at a long dollar, CAD dollar Swiss, or you can look at a short euro dollar. Okay, moving right along at the Thursday again. Weird. This is kind of, it's Super Thursday. Usually Thursday, all the UK items come out Super Thursday, 2 a.m. You have GDP out of the UK month on month, supposed to be at 0. And GDP growth rate quarter on quarter is supposed to be flat at 0.1%. And the growth rate year on year is supposed to fall from 0.6 to 0.2%. So, yeah, this kind of glitched out. It put 8:30, but actually we're going to have lots of UK. They call it Super Thursday, where they actually have 1, 2, 3, 4, 5 UK items, UK economic announcements coming out that Thursday. Okay. And rounding off the week, we'll have the US at 10 a.m. That's the other news cycle in the US or North American market. We're going to have the Michigan Consumer Sentiment Preliminary. The previous number was 63.5. Look for a decrease of 63. The University of Michigan, the Consumer Survey is widely watched to look at how consumers feel about the state of the economy. And usually it used to be like near like 90, in the 94, 95, but now it's 63. To tell you how things are out, how recession fears have dampened this number. And so we could see, again, we will look at the euro, dollar Swiss, dollar CAD as our possible trades. Dollar yen is also a good currency to look at. Okay, so now we have the full picture of the economic calendar for this week. Let's move on to the technical picture. I know many of you are chafing at the bit, like, Greg, let's get off of these fundamentals and let's get right to the chart. So I'm going to switch over to I'll usually start with the DXY, which is the US dollar index, which is a basket of currency pairs versus the US dollar. And we'll go ahead and clean my charts up and keep them nice and clean so we can get an overall trend direction. We're going to start with 50,000 foot view, start out with for a monthly chart and work our way down. How about that? Okay. So this is the dollar index, the monthly chart. And you can see that we've been making some series of higher highs and higher lows, still hanging around that 100 whole number, round number area, acting as key level support for 1, 2, 3, 4 months. This support level has held. There's some Fibonacci support coming in at the 101.28. After we reached highs of the 114.78 area that we hit back in that was September 1st, and we've been a downtrend ever since. Short-term downtrend. Still trying to find a bottom in this 151. 100.51 to 101.26 area. Now let's drill on down to a weekly chart. And you see we really haven't gone anywhere since January, still hanging around this support area. And in fact, the last 4 months or 4 weeks, we've just moved in a sideways, very tight range, very tight. Usually when we have a tight range, it usually leads to some type of a major breakout. And let's move on down to a daily chart, and you can see it's been completely flat. The dollar pairs have been moving very sideways with nothing going on. And this is where you had actually transitioned to, a lot of the traders at Lead Traders University have transitioned over to trading gold and also trading some of the cross rates like dollar yen or cross rate, meaning like pound yen or pound CAD or euro CAD, pairs that don't have the dollar in them so much, or they move to a commodity because of the sideways movement where the dollar is not making any headway and the other currency pairs are able to make some headway against the US dollar. Let's even go down, but it's an excellent to scalp if you go to the lower time frames, because the ranges are not very, you won't get margin called out so much because we're staying within certain ranges. And you can see we're just moving in a sideways, very boring price action. But let's move on to let's take a look at the euro. So bulls versus bears, dollar. I'm short-term bullish. I'm still bullish on the US dollar, but let's go ahead and look at the euro. And usually if you can figure out the direction of the dollar, you're pretty much going to have the other currency pairs, the majors, actually figured out. And you can see the euro's doing but basically the same thing going to a monthly chart. We actually had a little bit of an uptrend from the lows we had back in September 1st, but we got as low as 95.35 or so. And we reached a high near the 101.86 area. And we formed this pattern, candlestick pattern called the doji. It looks like a cross. It's basically the high, low, the open and the close are so close together, they just form a single line. So it's like a tie. So the bears don't win, the bulls don't win. And so we have, on the monthly chart, we have a tie. Now that tie usually means indecision, and either the bulls are going to take it above the doji high and it'll break north, or we'll break south below it and will form what we call an evening star candlestick pattern, and we can see some type of reversal. So we would need to see the low of this blue line at 1.0940 broken, or the high of 1.10946 broken. So it's a very tight range. Okay, so let's move on down to the weekly chart. Now, it is an uptrend. We have some higher highs and higher lows, and we haven't broke south. So it's still on a, it's a weak uptrend. And we're hitting support down here at the 109.72 area. So bulls versus bears, I am slightly bullish on the euro. It's like, well, how can you be bullish on the dollar? And well, I'm actually say more longer term bullish the US dollar, but short term there is some little short term where we might have a nice little uptrend off support, not very much room to run, maybe 70 or 80 pips at most, right? I was thinking that either non-farm payroll or the FOMC meeting or any one of those announcements could have taken us out of these ranges, and I'm not sure what the next catalyst will be. Oh, we have the debt ceiling. Debt ceiling is coming up on the 9th, and if they pass the debt ceiling, then the markets might reignite and be very happy. If they fail to to raise the debt ceiling and pass a budget, then we could probably see the US dollar could rally. It's counterintuitive, but usually when people are fearful and scared, they run to the US dollar. So if we get a credit downgrade, like back in 2011, we had a similar situation where the Congress was divided and Obama was president, and you had the midnight negotiations, all-night negotiations, which eventually we've got an S&P downgrade of the US debt. Certain government agencies shut down, certain different people weren't getting paid, and so that caused the big turmoil in the US financial system. So if we don't avert falling off the fiscal cliff, so to speak, we could see a rally in the US dollar on the back of that. But we're probably being held hostage by the Congress and the ability for them to work together to pass a budget and raise the debt ceiling. Okay, so bulls versus bears, I am again short-term bullish the euro. Let's take a look at the British pound. There's lots of pound data coming in, and pound yen may be a good cross currency that doesn't have the dollar in it, and which we could probably find some powerful moves going on. And already the euro, the pound is already rallying higher. So these are the trades that we had on during the Vegas. We traded the pound versus US dollar during the Vegas run, and we effectively forecasted the price and the direction, and we can just removing some of that old stuff there, move drawings, and here we go. So you can see that I'm going to start from the 50,000 foot view, and this is our chart. This is our big view of the British pound after making these lows down in the 103.50. And some people have postulated that the drop in the pound was really a salute to the Queen. If you look at some of the other monarchs, like when the Queen Mother died back in 2002 or 2003, and the Queen's consort had passed away, Usually what will happen is you'll have a period of mourning, and the currency will actually move in sympathy with the royal happenings. So, you probably even count the number of days and months that we've been in this downtrend, and now that the coronation is happening, notice how we have a rally probably in celebration of King Charles, the crowning, and we can see the British pound is absolutely just moving absolutely fabulous, higher highs and higher lows, nice powerful uptrend. It's the clearest trend that you can possibly see currently. Okay, now moving down a weekly chart, we can see nice smooth moves, green candles moving up from our low, hitting support, and we're approaching a breakout area above. In fact, we think we've already broken out. One spot 2434 and was a breakout, and we're at one spot 2630, approaching the 200 simple moving average at one spot 2866. If we break that, we got smooth sailing ahead to the old January 10th high of 2022 at one spot 3752. That's roughly 1,000 pips away, and we have a nice clear move there. Nice V bottom, inverted head and shoulders, just lots of good stuff right there. Also, we're approaching an old high from May 30th, 2022, and we're handling that level of resistance, just coming up on it. So we need a breakthrough there, and there's lots of open space there. Let's move on down to a daily chart, and you can see building momentum. And yeah, that's exact, especially going into the Bank of England announcement. A rate hike would take us on the other side of this line. Bulls versus bears. I'm bullish the British pound, probably the cleanest chart that we've come across. You can see the 4-hour chart, maybe a little bit of oversold or overbought, and we would probably like to see a little bit of a pullback before we re-enter the market. If we can come back down like to the 125 area, 125 3/4, that will give us a nice reset. Buying at support, selling at resistance. Right now we're at resistance, and we don't want to sell. Friends don't let friends sell resistance, and just sell support and buy resistance. You want to do the opposite, right? But I want to look at pound yen, because you might get a cleaner move in that as we see on the US dollar. And this is very clean on the 4-hour chart. I won't take you back through the monthlies and things like that. They're going to be pretty similar. Nice trend line break at a typical Fibonacci area of support, and we're looking at a bounce from the 618 area. It's at 168.20. Perfect tag of that level. Perfect break of the trend line, and I'm looking for the old high to be taken out by the end of this week, and that would take us to 172.30, and that is roughly 105 pips away from where we are currently. We'd like to see any type of weakness. We'd like to see a pullback on weakness. Again, this is not a trade recommendation, but it's something that I'm strongly considering looking at, and you may want to do so as well. Okay, moving right along, let's take a look at the Australian dollar. We do have the Westpac consumer confidence coming out as well on Sunday, and we can take a look what's going on there. Starting off with our higher time frame chart, and we'll remove all drawings, and we have surprise hike in interest rates from the RBA, the Reserve Bank of Australia, which was wasn't expected. They were expecting to keep rates unchanged at 3.5%, but they wind up hiking, and so that caught the market off guard. We see a nice big green candle there, and we see that we're basically broken almost broke it. We we were in a tight range for several months, 1, 2, 3, 4. No, this is a weekly chart. So we still have to break this 68, 67, 80, 87 area. But we have strong candles, a strong bullish engulfing candle that is, from the bottom of the range. If we break 67, 89, then we could probably see the 200 moving average coming under pressure at 0.7049. And that will take us back to the old highs from January 30th, 2023. Okay, so bulls versus bears. I am bullish the Australian dollar, especially in the back of the surprise interest rate hike by the RBA in an attempt to tame the inflation fire that's ravaging the country right now with higher housing costs. And so we nice little uptrend there. We need to break this area of resistance to see some of these higher highs come into place, especially if we can, break on through to the other side. And, we can probably see 70.36 in no time. So again, we have plenty of catalysts that can get us up over this line. Let's see if they come forth. And let's go. I think the euro was the other one. Was the other thing we're going to take a look at. Yeah, that was the big flag, the euro. And EUR/USD. And big news out of Italy as they have signed the Belt and the Silk Road Belt Road. It was some type of trade agreement with China for infrastructure rebuilding, the Belt Road Infrastructure Bill. That's BRI. Okay. And that's, it's been controversial because it gives a lot of control to China and gives China a foothold in Europe. And with the policies against Taiwan that the US and its allies have saying they're going to stand with Taiwan while China regards Taiwan as a breakaway republic. Well, anybody that subscribes to the Belt Road infrastructure plan with China kind of like has to agree not to side with Taiwan and to have a European ally side with China, and then you had also Macron in France side with China as well. It seems like the American, the pro-American front of NATO is being taken apart over infrastructure, and so that's causing a rift in the European politics, inter-European politics, and it's having an effect on the euro as well. So we'll see. We're looking at a monthly chart, and we can see that we had a nice run, higher highs and higher lows, similar to the British pound. Usually the euro is pretty strong in the spring. You can go back to several of these charts in the back, and you can see rallies. Here's 2017 in March through April. We had these big green runs usually happen in the springtime. There's a seasonal relationship, and if you are interested in learning about seasonalities and how they impact currencies like the euro, you really should look at seeking mentorship, coming to Elite Traders University, and finding out more on how these seasonal patterns can benefit your trading. Okay, here's the euro monthly, dropping down to weekly, higher highs and higher lows. We did take a look at that. And let's go ahead. We did look at that. Let's look at the S&P 500, because that's also going to be something that we want to look at. And we have a big push up. We have big push up after non-farm payroll. S&P 500 inverted head and shoulders. We're still trunching around in between 41.92 and the lows of 40.43. Haven't been able to get out of its own way. Typically around this time of the year, sell them in, go away. This, usually we see this seasonality turn bearish as we get closer to the end of May. But right now we're just moving sideways. We bounce off support. And so maybe for the next couple of days, bulls versus bears, I'm constructively bullish on the S&P 500. See a continuation after the non-farm payroll move that we had on Friday. Okay, let's look at the NASDAQ 100. NAS 100 or the QQQs or US Tech. Goes by many different names, but it's the same chart. The NASDAQ 100 had a tremendous day on Friday, and it's been an uptrend for the since of January 2023, coming from the lows of 10,950, and we're about 13,000. Higher highs and higher lows. Nice strong uptrend. Last couple of months have been kind of sideways in the 13,209 area. Let's move on down to the weekly chart. We do have a bullish uptrend, higher highs and higher lows. In fact, we tagged the trend line, lower trend line, about a week ago, and now we are at the top of the range, moving down to a daily, and we have a nice tag of the bottom of the trend line, moving up. And so bulls versus bears, I am bullish the NASDAQ 100. Target, if you look, anytime you want to look at targets, you want to look left for your targets. And if we look left, we have 13,718 as a target from our old high back on August 16th, 2022. We also have a bold swing high that we're currently testing. We have a high from August 26, 2022. We've been hitting up on that. If we can break that, we can quickly move from 13,218 to 13,718, about 500 points between where we are now and where we could go based on the trend and based on prior resistance. Now, if we can break that 13,718 area, it looks really interesting. We start moving into the 14,000 number, looking at 14,252.10. Okay. So indices look bullish. We can look at Bitcoin, and we can look at Bitcoin here, and we can see going monthly chart, move on drawings, and we can see we haven't been able to recapture that 30,000 area. Currently at 28,924. Moving down to a weekly chart. Still have a nice uptrend, higher highs and higher lows. Just had a little bit of a setback on Friday. Still within the range. Daily chart, we're hugging the lower support line, rising trend line. And maybe get a little bit of a bounce. So bulls versus bears, short-term bullish. If we break below the trend line, then I'd probably be bearish, because we're at this kind of a key point where price needs to take off from this trend line. With the dollar not really moving higher, it seems like Bitcoin could on its own pull itself along, maybe retaking that 30,000 area. Okay. All right, ladies and gentlemen. Well, I want to thank you so much for being with me, and I hope you gained some information of a game plan for the upcoming week. I wish you all the best. Make sure you drop on over to Elite Traders University. Go to elitetradersuniversity.com, and there's lots of free resources there to help you in your trading, and including a free ebook, a free masterclass called 4 Pillars to 6 Figures. And also, if you're interested in becoming a student, you can also enroll, apply to enroll, speak to a member of my team to see if we can help you achieve success in trading. This is Dr. Greg McLeod from Elite Traders University and the My Market Heat Map. Signing out. Peace and pips. Talk to you soon. Happy trading. Yeah.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!